Thursday, and it's a very dramatic Thursday so far. It's pretty remarkable because we're like a couple of days off of the all-time highs. We hit new all-time highs last Thursday in the S&P and the NASDAQ. The Dow's been a couple of weeks since we hit new all-time highs. The Russell hit a new all-time high earlier this week. So as a rule, we view new all-time highs as bullish. Volatility is up, okay? And hence why you are seeing this intraday choppy price action. Like I mentioned to Corey, some of the positions I'm in facing some heat at the moment, but they're holding on. They're holding on. And so this is what it comes down to as a trader. You have different time horizons as someone you're trading against or even the market maker. And really what it comes down to is staying in your lane, staying focused on your plan, and not getting distracted or taken off your track based on what someone else is saying. So that's why I want to start with detachment, seriousness, and results. It was almost as if I think back to years ago when I was still trying to figure out my rhythm as a trader. I wanted so bad to be able to trade, for profit, and more importantly, consistently over time, and then outperform. Right? That's really what it comes down to. And it's like the more I wanted it to happen, the harder it was to reach that goal. And it was almost as I kind of came to the point where I was like, if this trading thing works out, fine. If it doesn't, then fine. I'll figure out something else to do. I guess it was like I stopped being so desperate to be a successful trader. But I always, I was serious, and I said, you know what? I'm just going to follow my plans. I'm just going to follow what I write that I'm going to do, and whatever happens, happens. And after a while, I was like, wow, like this is actually working. Let's see if this is luck or if this is, the start of something serious. And then I just kept doing it and doing it and doing it. And the more that I would write out my plan and articulate my plan, and the more I would follow it, the more confidence it gave me to handle even a day like today, right? I'm not making money today. I'm not making money today. Do I need to make money every day to achieve my goals? No. One, because I'm not a day trader, but two, my primary focus is serial outperformance. Serial outperformance. And so that's what it comes down to, the results. I don't need every trade to be a winner. I definitely don't want every trade to be a loser, right? I'm definitely going to have losing trades like anyone else. But just the whole idea of accepting whatever outcome a trade's going to have before you take it, to me, it helps me, stay level-headed in an environment like this. Because, like I said with Corey, there's tension in the air. There's absolutely tension in the air. I'm going to show you some sentiment data that I am looking at that to me doesn't really spell disaster here near term. There's a lot of concerns in the market, in the world. There's supposed to be a 3 p.m. announcement today from Trump. I don't know what it's going to be. I don't know if that's confirmed. People are talking about it all in the crypto sphere. Really interesting price action in Bitcoin and Ethereum. I like it. I think we're in the process of having a great momentum reset right now. I'm going to show you some reminders of why we do not like to fight trends. And since gold is the talk of the town, we are going to be looking at a history of bull markets, but also bear markets in gold, how long they last, how long they tend to move, and what we may be able to expect here. Because the gold market is absolutely going crazy. We're seeing some big moves play out in bonds today. Dollars getting smoked. So, that definitely is a tailwind for gold. But in theory, it should be a tailwind for crypto as well. So, as crypto, as Bitcoin's, hovering around its lows here, does the weakness in the dollar point to a potential reversal in crypto at any given moment? And this, again, I'm not one of those people that says, hey, guys, look to this data point, for a reversal in trend. Well, I don't know. Is the 3 p.m. announcement on a Thursday after some chop, is that by design, or what's that going to bring about? So I would stay tuned for all of that. Let me go ahead and jump over to my Think or Swim now. Okay. See who's all in the chat. Appreciate you guys joining me as always. The last 2 days, I was paired up with Blake and Professor, so I actually have some stuff that I've been wanting to cover with you. Finally going to be able to do so. And I don't know if you guys caught this the other day, but Powell pretty much announced the end of quantitative tightening. And we're going into rate cuts in less than 2 weeks, guys. Let's not miss the forest for the trees. Markets are allowed to have intraday volatility. I just need to find my chat room. Here it is. Okay, who do we have? We have Linda, Stefan, John G. Yeah, you guys are killing it on the day intraday swings. Love to see it. Ken, how's it going? Mari, Asher, Anthony V, Roger Bro, Randy, Sully dropping the link of the unofficial room pick tracker group effort. Sully, appreciate you dropping that link. It's good to have you back in the chat. We don't have that many positions open at the moment, but we'll see if we can find some. I mean, maybe it's time to take a swing on the long side and some good swing setups here. We'll see what we can come across. Okay. Frankie, Bon Jovi D, P-Butts, Les, Daniel, how's it going? Rosario, fistful of dollars. Shirley is baking banana bread. Yummy. I love banana bread. Two Carter, Bryant B, Steve V, Ken saying, welcome to Backwardation Thursday. Yeah, that definitely is something worth keeping an eye on. Massimo. Jordan, what's going on, man? Yeah, we're watching Mara. Mara basically retesting around the infamous freeze point. So we'll see if that holds. Portfolio is well up off the lows of the day. So again, I'm one of those traders that cares about the closing bell above all else. I think that the majority of price action that goes on throughout the day is not worth paying attention to unless you are a day trader. Okay, so I'm talking about swing style, position style. What goes on between 9:30 to 3:30, honestly, you can miss 90% of it and still come away with a pretty good story on the day. Isn't that something? Isn't that something? TD, good afternoon. Doc Neal says Trump is talking to Putin right now. Oh, wow. We shall see. We shall see what comes about. Wamuka, bleak. All right, guys, let's go ahead and get into the charts. So starting off with our currency markets, as we always do. The dollar taking it on the chin. And this is why I have been saying as of late, I've actually been saying this for the last few years, but I've only been here at TheoTrade now for over 2 years. But I've been saying we're in a new macroeconomic regime. Why? Why am I saying that? Well, because we have the dollar getting absolutely smoked today. But what are you seeing? You're seeing crude oil down. You're seeing gold up, which is pretty normal. You're seeing stocks down. You're seeing crypto down. So wait, I thought that when the dollar goes down, crude oil automatically has to go up. No. That's why I've been hammering that point over the last several weeks. Okay? Been hammering that point. And you see it playing out today. So was the Japanese election a buy the rumor, sell the news? Well, apparently the new prime minister that was going to, bring back Abenomics, the coalition could be falling apart. That's the last thing I heard. So she might not be getting into power. I have not been putting out many trades on currencies because we do swing style, not having the best feel on it. And so that is part of being a trader, is having good judgment, being judicious in our decisions on what market to trade. I'm a trend trader. I'm like my friend and colleague, Corey Rosenblum. I'm going to find the strongest trend and focus on that one. If a trend isn't clean, if a trend isn't obvious, if a trend isn't making one direction of the market money very easily, I'm not really that drawn to it. And that's kind of been currencies over the last several months here. Okay, so let's go ahead and take a look at the euro against the dollar. Again, the euro is up today. We may have just experienced a major cyclical reset in the euro. Could be very consequential. This is part of our game plan going into year end and in the next year is continued weakness in the dollar. This is a major policy objective of the current administration. They want weaker dollar. They want lower rates. Well, if you have lower rates, what appeal is there for the dollar? It actually works out. It actually makes sense. Inflation today is not accelerating. Yes, inflation is still present. I'm always very careful with my words. You can have inflation without it accelerating. And so in that environment, interest rates tend to fall. And so, okay, what's the appeal of the dollar? We're throwing out all the rules. When it comes to trade, we have tariffs, we have all this uncertainty, we have domestic strife, we have this, we have that. I don't want to be in the dollar. I want to get in on these international markets. So I have been bullish on China. I still am bullish on China. I don't have as much China as I've had in recent weeks, but I haven't thrown out that bullish outlook in China. I'm still holding some long positions in Chinese names. So again, we'll see what happens today. We'll see what because I don't know if you guys saw. Apparently, China came out today and said, "Oh, we're working for a solution with trade." I mean, guys, it's also tiresome. And Don's been saying this too. If you've been listening to Don, I've been tuning in a lot lately because this whole volatility environment. You have the backwardation of the VIX. This is like Don's bread and butter. So I've been tuning in, and even Don's been saying like this isn't about trade, and I agree. It's not about trade. Stocks have gone up quite a bit. You're going to get some sideways action. You're going to get some chop within the trend. And so I feel to me nothing has changed from a structural standpoint in the trend, in the market environment. You're still seeing the right leadership come from the right places, at least this week. So, yeah, Roger asking a good question. What about France debt crisis? Well, what's probably going to happen, Roger, is you're going to get some more accommodation from the European Central Bank. I mean, they'll figure something else out. The thing about the Eurozone is like you can have one country doing poorly, but another country doing well, and it kind of balances out. So I need you to think about that. Like France, not really the brightest moment for them, but compared to past decades, Italy's on the rise, guys. And I'm not just saying that because I'm Italian. I'm saying that because when I was there this summer, I mean, I actually saw like the Italian people like out being like tourists, like being in like their local tourist towns, their beach towns. Not so much like a bit more confidence in the air compared to previous years that I've seen. I can't really speak to Germany. I don't have as many connections there on that note, but a lot in France, a lot in Italy. France is a bit of a headache in that regard for the European Union, but Germany's economy hasn't really been as strong in recent years. So it does appear that all around the world we're going to see accommodation from central banks. We're just waiting for the Bank of Japan to kind of drop the hammer on that front. So I'm actually checking the portfolio now. A few tech names and a few semiconductor names back positive on the day. So I'm really looking forward to getting into all of that with you. Let's go ahead and take a look at the euro against the Japanese yen. This one's still hanging out near the highs. Again, the euro seems to be hanging out near the highs, consolidating its gains. Europe's been the hot market year to date. I do think a lot of that's going to shift over to China and Asia in the next several months. But again, in currencies, right now it seems like the cleanest trend is in the euro. So let's go ahead and jump over to bonds. Big moves in bonds today. Not so much in the 30-year bond, okay, but it is doing what I want to see it do. It is outperforming on a percentage basis. But remember a few weeks ago, I guess it was 2 weeks ago, when we had the buy the rumor, sell the news setup from the Fed's last rate cut. Okay, I said going into the rate cut, could be topping out. Look for buy the rumor, sell the news. Then when everything started dropping again, the whole bond vigilante crowd came back out and they said, oh, bond vigilantes, it's going to be Taco Trump again. Yeah, that for Taco Trump for different reasons, right? Taco Trump for different reasons. But this is actually a really bullish setup. And so here's one of two things that I'm seeing right now. One thing is that you're about to see rates come down significantly. There's some stress going on in money markets and in the repo market. And that's why That's why I'm actually going to jump back over to this, my slide deck here. I have to use the Zoom browser today because my Zoom app wasn't cooperating. Powell signaled that the central bank may stop shrinking its balance sheet in the coming months, an important shift necessary to preserve liquidity in the overnight markets. Okay. It'll never be easy. It'll never be easy. So is everything about to fall apart and that's why bonds are rallying? Or is the Fed about to release a massive stimmy package together with the federal government, and we're going to blow this market up to new all-time highs? I mean, we should have our answer in the next week or two. I have stop losses. I really don't know what's going to happen. I have my probabilities. I have my bias. But if only we knew the future. Excuse me. One disadvantage about being on the browser is when I like jump back and forth, it takes me puts me back on the full screen, and then also when I want to pause, when I want to mute myself to sneeze, it a bit longer to get there. So, anyways, now that that's still out of the way, and hopefully I don't have to sneeze anymore. Thank you, Greeny. But yeah, so the Fed's going to be accommodative, guys. The Fed is going to be lowering interest rates, okay, and this is going to help certain sectors of the market more than others, okay. And I think the biggest breakout that we're seeing today when it comes to bonds, 2-year Treasury. We've been talking about this, have we not? The 2-year Treasury being the tail that wags the Fed dog. Look at this move. I've been saying for weeks, if not months, that if this was a stock that has big percentage moves, I'd be saying, guys, get ready to buy this chart. Rates are coming down. That has been our position all year. It's taken a while to get there. And again, I think we're just going into a higher liquidity environment that's gonna help a lot of stocks. It's a lot of stocks. So right now we have this short-term volatility we need to shake out. Okay, know your time frame. What is your time frame? Are you a day trader? Are you a swing trader? Are you a position trader? Because the price action that we're seeing today, for example, is going to mean different things for different types of traders. Is really what it comes down to. Okay. So what's going on in bonds here is exactly what I wanted to see. It's exactly what I want to see, and I think it's very bullish for the overall market, mainly because inflation isn't an issue. Okay, not right now. Let's go ahead and take a look at crude oil. Crude oil is breaking down, but the dollar is going down. Shouldn't crude oil be going higher? No, crude oil is actually about to close at its lowest level, well, since May 5th. So yeah, if Trump is talking to Putin, maybe there's something good happening, and there's about to be a bunch more Russian oil on the market, guys. I don't know. I'm just speculating, but that could be a variable, an outcome of what's going on. Okay. So oil breaking down. We've been bearish oil. I said, listen, this is not where the exciting opportunities are in this market. If we were to close the week today, be the lowest weekly close going back to 2021. I told you it's a war right now between drill baby drill versus print baby print. We just started printing seriously again. And there's stress in money markets right now, which, does raise some eyebrows with respect to the current volatility, right? That is a bit of a concern. Are markets picking up on some serious issue? Are stocks picking up on some serious issues in money markets, and that's leading to weakness near term? But let's not miss the forest for the trees, guys. We're above Friday's low. We're not making new lows here in stocks. What's making a new low so far this week? Well, crypto and crude oil. So crude oil to me is not where the action is. You haven't seen new lows yet in the energy ETFs. But, again, just to bring it back to bonds, you're about to close today, the highest level since everything blew up on April 7th. I guess that's when everything bombed, but that's when bonds took it on the chin. Okay, this looks like a chart that is about to break out significantly higher. I would expect this monthly candlestick to be finishing up near this upper monthly Bollinger Band. Okay, so good things happening if you're a bond bull like me. Good things happening if you're a dove like me. You know, I like hawks too. Here where I live, I see hawks and doves. So, the hawks are a little bit more rare just because, they're doing their own thing. But I see doves a lot in my morning walks. So, anyways, that's what's going on in the bond market. Let's go ahead and jump over to stocks. So, we pretty much have given back yesterday's gains. And did we even take out yesterday's low in ES? I don't think we did. So, actually, today so far is an inside day on ES. It's an inside day. We have not taken out yesterday's high. We've not taken out yesterday's low. The NASDAQ did take out yesterday's high. I like that. The NASDAQ did just flip back negative again. Let's see where we finish this day. The NASDAQ took out yesterday's high, did not take out yesterday's low. Okay. NASDAQ is down the least out of all the indices. That is a good sign. The Dow did not take out yesterday's high, but it took out yesterday's low. I mean, there's divergences everywhere. It's a very sloppy, choppy tape. This is not a tape to be a hero in. As a reminder, in the Dow futures, we are 2 weeks off of the all-time high. Okay. In the ES futures, we are 1 week off of the all-time high. Okay. So I'm going to show you why in a moment, why I think there is a great momentum reset going on right now. But first, I do want to show you how semiconductors are up on the day. Semiconductors are up about 0.2% right now, the semiconductor index. You take a look at the ETF and you see semiconductors are up about 0.5%. So every day I come in here, I say, hey guys, take a look at what the growth sectors are, what's leading, what's lagging, is this bullish, is this bearish? And every day you see when chips are leading and when technology is leading, that things usually aren't falling apart. Guys, technology, the biggest sector in the market, is up on the day. We'll see what later today brings. Utilities are down. Consumer staples are down. Okay. Healthcare is up, but ever so slightly. What about consumer discretionary? Okay, that's down a little bit. In communications, that's down. But I'm telling you, the big story today is in technology. It's in chips. We are still getting good news coming from those sectors, okay? And it's keeping this market higher. If we start to see other sectors assume leadership and this market keeps climbing higher, I'm going to tell you that something's wrong, okay? So it's not like I'm just coming in here cheerleading every day saying, oh, guys, we're bullish, this market's going higher. I'm always telling you what I would want to see to change my position, to change my opinion. And we're just not seeing that right now. So again, yes, can you hold the intraday tension? This is what I talk about all the time. Okay. It's like those first couple dates with your current spouse. Can you hold the tension? Can you avoid making yourself look like a dork? Okay. Same thing with your portfolio. Can you avoid making a mistake that's going to cost yourself money? Okay. So let's see. We just had the 4-hour candlestick here. Yeah, I mean, nothing's really gone crazy. And, do we fill that gap? I always say, oh, gaps get filled. I don't know if you've ever gone back, and it won't show up in the monthly chart. There's like a gap from 2013 that we never filled on the ES futures. Okay. So, make of that what you will. Let me go ahead and jump back over here to my slide deck because I'm calling this the Great Momentum Reset. I want to show you how stocks tend to behave when you have 3 straight days below the 20-day moving average, okay, for the first time in over 80 days. So we went over 80 days with the S&P 500 closing above the 20-day moving average, okay? And then we had 3 straight days below the 20-day moving average. If you look at the performance 1 week later, we are up 80% of the time. If you look at it 2 weeks later, we are up 70% of the time. 1 month later, 90%, 2 months, 60%, and it goes on. And then 1 month, 1 year later, 9 months later, you're pretty much up 9 out of 10 times, if not more. Okay. But to me, this is not even the biggest story of the day. Every Wednesday, every Thursday, we get an update on what the majority of the advisory class thinks of the market. What is the stock market's direction in the next 6 months? Okay. Well, we hit a new all-time high last week, and we have 46% of market participants that are bearish. Not all market participants, but those that participate in this survey. 46%. That's pretty high, especially when you consider the historical averages are just around 31%. Okay. So what is everyone so scared about? Because the VIX is creeping higher? I mean, again, unless something's really starting to break in the money markets, the Fed's going to have to step in. Would that be another dip buying opportunity? I would say so. A lot of neutral folks, but not a lot of bulls. Not a lot of bulls. And like I said, you can cut the tension right now with a knife, all due to a 1 day of sharp selling. People blew up their accounts. It was the biggest crypto liquidation in history. Why is everyone so levered up to the gills? Because they are desperate. They are desperate, and that's not good. I don't like to see that, but that's the environment that we are in. That is the environment that we are in. So let me go ahead and jump back over here to Think or Swim, because I want to start looking at some of the big tech names with you to see what's going on in that department, seeing what's holding up pretty well. So Apple's down around 0.8%. I like to see this going sideways some more, consolidate under its all-time highs. To me, that's fine. No issues there. NVIDIA is up on the day about 1.5%, a little bit less. To me, this looks like a retest of that former resistance turn support zone of this ascending triangle formation. Okay. So yeah, this is looking totally fine to me. Not much really to be concerned about. Netflix, you got to watch this level around 1140, 1150 in Netflix. That breaks, you got some issues. Netflix earnings are coming up next week. We do have a lot of earnings lined up in big tech names next week. The one that I'm watching the most at the top of my list, naturally, is Tesla, because I have a big position in it. Okay, it's one of my biggest positions. But I do think that Tesla is going to be the dominant mover amongst the Mag 7 in 2026. I just think the stock's going to go absolutely insane. I mean, if I got a target of 670, guys, my target's no longer 500. I've officially raised that, and I guess I'll make it formal on tomorrow during garbage time when we do a review. No need to touch the stop loss on this, but this does look very good. Microsoft's still basing after being a very strong leader earlier this year. Okay, that's totally okay. Meta still chopping around near the lows. It's got some problems. Amazon, I'm watching Amazon here very closely. Amazon has really underperformed the overall market for quite some time. And again, I just think that it is a consumer story. And, earlier this week, Blake and I talked about some of the issues with consumers. Yesterday, I talked about with professors some of the issues with retail. Well, Amazon is the ultimate retail barometer. It is. I forget the actual number, but Amazon accounts for something ridiculous of like average daily retail value in terms of like a percentage of the transactions that happen on a daily basis. It's really remarkable what Jeff Bezos built in that regard. So Amazon above 240, Amazon above 238, 240. This thing is going to be going above 300. So we just got to be patient, got to wait. I think we're setting up for a bottom here in that regard. I like that still. Google has been pretty strong as of late. Google's hitting another new all-time high. So again, the big question is what's happening with the VIX? Well, Don's been talking about that quite a bit. Do we have that backwardation? I think that we do. Yes, you do see backwardation to November, and then you do see backwardation also to December. So what is the market so worried about here near term? I don't know. Are they worried that the Fed is behind? The Fed is late. I mean, the stress that we're starting to see pop up in money markets and the repo market seems to be a possible culprit. I don't know what's going to happen at 3 o'clock today, guys, but based on how I see this tape shaping up and how we've had an inside day in the ES here, it may end up being a pretty important announcement. Let's check in on China real quick. China is actually up on the day pretty nicely. Okay, KWeb up slightly on the day, and then you have CQQQ, the Chinese tech ETF is flat. So as U.S. markets spin, you have large cap China up pretty nicely, but you have the tech sector kind of slowing down some. So yeah, again, we'll be seeing what goes on. Yeah, I'm glad you mentioned that, Brian. I know that there's been some issues in regional banking. I mean, they're getting smacked today. Financials, after having a good response to earnings, are selling off. So let's take a look at that. JP Morgan, what a fizzle there. But we can't judge these candlesticks until we get the close. Wells Fargo was the one I thought looked good. That hit a new all-time high yesterday. Let's see what happens. So needless to say, tomorrow's weekly close will be very, very important because financials are kind of snoozing, but techs are pretty much at all-time highs, guys. So that's all very important things to track. Just checking on the portfolio again here. Still spinning the wheels some. Let's take a look at crypto, what's going on. Really interesting stuff happening here. Okay, so Bitcoin has taken out its low from early September, both Bitcoin Cash and Bitcoin futures. Okay, Bitcoin Cash and Bitcoin futures. But we have not seen that. Well, I should take that back. We've seen Ethereum take out that low from September. It wasn't really pronounced, but Ethereum hasn't even taken out that low, hasn't taken out last week's low one, and it hasn't taken out that low from late September too. Why is Ethereum showing so much strength? Do you think that's bullish or bearish? Do you think that's something you would start seeing, at the beginning of a bear market or at the start of a new bull run? So Bitcoin had this breakdown earlier today. I wouldn't be surprised if Bitcoin maybe had a final washout to like 104 and that was the low. But I'm seeing a lot of signs here in crypto that we are about to bottom. Okay, so we actually, remember, we booked our profits on HUT. I like to see that go sideways a little bit. You got names like IREN that are peeling back some. Solana's chopping around. That took out that recent low. Roger, to move alt season, I think we need to see Ethereum basically above 5,000. I think that's kind of the secret sauce, the secret recipe for an alt season to come about. Theoretically, Solana is an altcoin, right? I consider pretty much everything except Bitcoin and Ethereum to be an alt. But VIX is still hanging out here. We'll see if we get slammed into the close or if we're going to see this thing explode higher. We're kind of, like I said, teetering off the edge here. But mark my words, we do have the setup for a bottom. It just depends on how we close. As a rule, closing at the lows of day is bearish price action. So like, for example, yesterday, we were looking pretty good. You sold off hard intraday. It was not looking so strong around 1 p.m. or, noon. And then you rallied back off the lows of the day and closed pretty much, flat. And you were up slightly on the day, but pretty much flat. So again, let's see where we finish this day. And then if we end up finishing near the highs of the week, buckle up, because we're seeing tech lead this week along with semiconductors, usually what you see coming out of an important market bottom. All right, let's take a look at gold. I mean, I'm at a loss of words here, guys. I'm at a loss of words. I would feel a lot worse if I didn't have, like a huge position in GDX parked in an account I don't actively trade. So yeah, I mean, I have not been actively trading mining stocks for a couple of weeks, or gold and silver for a couple of weeks. I do have exposure to this, thankfully. With GDX, SIL is up a little bit less, but you have GC gold up around 2.6% on the day. Silver still up over $50. Just an absolutely incredible candlestick here. And so, yeah, I mean, the new floor in silver probably going to be around like 45.50. And so I'm still looking for that dip. I'm not throwing in the towel on the possibility of a dip in Q4 here. But I want to be very clear. I'm not betting on gold and silver pulling back. What I'm doing instead is waiting and getting ready to buy the dip. I'd like to buy the dip. And it might take a little bit before we finally get that. All right, let me jump over to this slide here. Okay. And we'll look at gold's history. The history of bear markets. How often the gold tends to drop and how long it tends to drop. When gold has a bear market, the average drop is around 30 to 33%. And it tends to last a little bit over a year, almost 2 years. Okay. Now you take a look at gold bull runs, and we've been in one since September of 2022. You usually get appreciations of at least 100%, and they last 600 to 700 days. So this is a big bull run, guys, that we're seeing in metals. Like the best one that we've seen, actually, I would argue the best one. So not as long as what we saw from 2015 to 2020, but more in terms of percentage, almost matching the bull run that we had after the Fed dropped rates to zero and then eventually launched QE in 2008, 2009 period. So we've almost surpassed the great precious metal bull run going into that all-time high that held for many, many years in 2011. Isn't that incredible? That still wasn't as impressive as that bull run into the 2006 high, and it lasted longer. But we're not far away, and there's still be a lot of time left before we get anywhere close to that. I mean, we're talking like more than a year. More than a year. So pretty amazing when you think about it, what we're seeing in gold. But I do want to offer you all a great reminder about how well heavily shorted stocks have raced higher this year, how well they've been doing. Okay, so the average U.S. stock going back to 2020, chopping around, you look at how well most shorted stocks have done, especially this year. Well, this is why a lot of our trades have been working. This is why a lot of Brandon's trades have been working as well. I know that Brandon likes to look for highly shorted names too. Okay. So I see articles, Wall Street saying all the short sellers, these dumb retail folk, they're so silly. Well, guess what, guys? Like, how many professional traders do we have here at TheoTrade? What do you think all of these surveys classify us as? Okay. They're not classifying us as institutional. They're not classifying us as large. Okay. You're talking like hundreds of millions in that case. We're retail. We are retail. So we've been taking it to the man. We have been taking it to the man. And the great chase. Only 22% of active funds this year are beating the index. We are poised for the worst year for active managers in decades. Why? What is the problem with active? You can see how in 99 in the .com, that was kind of the peak of active. Then they just got absolutely smoked in 2003, into 2003. A little bit of a bounce. Do you think this is mania environment? I mean, you even look into the COVID high, the post-COVID high. So you had the COVID crash, and then you had the big run up into the 2021, 2022 high. You had a lot of active funds, active managers outperforming the benchmark. They aren't right now. Has anything changed? I mean, you would think we have a better sense of how the algorithms operate, right? I mean, I think that I do. I mean, Professor talks about it all the time. Why do so many active managers struggle to beat the benchmark? Are they just, do we just simply have less discipline now than we did in the past? That might be a very simple, straightforward answer. Is there not as much talent on Wall Street as there was in the past? Has Wall Street replaced their top talent with the algos? Why? I mean, if you're a good trader, why manage money? Yeah, I mean, if you're looking to, I guess, make your fortune, you want to manage money and get your 2 and 20 or 2% and 20% profits for a while. Make your fortune, manage money, then I guess retire into the hills, retire to the mountains, become another one of those retail or small traders. But it really is a mystery that I have not figured out, because we have more resources, more data, more information now than we definitely did 25 years ago on how to trade better. Right? I always talk about how, like, I'm a modern trader in that respect. I learned on the internet, never went to Chicago, never went to New York, didn't go into the pits, the trading pits, that is. I learned it all online. What do you think is going on? Why do you think so many struggle to beat the benchmark? Okay. Yeah, Jill, there you go. I love to hear that. You're having your best. Yeah, this is not my best year I've ever had. But Lewis asking, how is my portfolio holding up year to date? Well, $1 million challenge is up around 60%, a little bit less now because of today's sell-off. We're up around 60% on that. And then Trinity Trade, we're up around like 35, 40% in that ballpark. So yeah, I mean, we're beating the market. We just need to see how we finish out the year. Rodney asking, Rodney's saying, sorry, I was looking at Lewis's question. Rodney's saying they're focused on money under management and not making money. I agree. I mean, this is actually one of the big reasons why I left the industry, because, there was like, oh, you can't time the market. You can't. It's impossible. Well, maybe you can. No, nobody can. Okay, but I see these guys like doing it here. No, it's not true. But they're showing their accounts. No, they're not. I mean, just because you deny something exists doesn't mean it's not there. Right? So Daniel raises a good point, because 75% of stocks aren't participating. Well, let's own the stocks that are participating. And we do. So there's actually a very wise comment that you just said there, Daniel. Because, diversification, if I put all my portfolio into like 1%, each position is 1%, you have no conviction. And this ties into what Rodney said. They're more focused on AUM, assets under management, versus winning. And I think the average person cares more about winning. They want to outperform the market. They want to outperform their neighbor down the street. They want to go to their cocktail parties and say, oh my gosh, have you seen Wall Street this year? On a year when it's up 5 or 6%, which is nothing, right? That's what people want. They want to beat the benchmark because they know instinctually, they know in their gut it can be done. And it can be done. So, yeah, all very important information here. I think this was the last bit that I had to share on my deck. Yep, that was. So let me go ahead and jump back over to Thinkorswim here, see what's going on in this market here, as we have about 15 minutes left in this session. Taking a look at intraday silver. Yeah, I mean, it is pretty wild stuff. So S&P seeing a little bit of selling now. Okay. Let's see if we take out that low from earlier today. That's gonna be the big test. And if we close out near the lows of the day, tomorrow might not be so fun. We'll have to see. We might have to head for the hills some more. But yeah, volatility here still creeping up. Bitcoin. Like I said, the conditions are there for a bottom. And we'll see what this 3 o'clock announcement brings about. So now what I would like to do now is, because the tech sector is so strong, I would like to, I got to log into my, one second here. I got to log into my scanner. Sign me out. I would like to look and see what's going on in the tech sector. So let's see, how big is, actually quite a few names showing up on the list today. Some of these names have been going absolutely crazy. Wolfspeed, that caused some issues for some market makers a couple of weeks back, but actually holding its gains pretty well here. I mentioned yesterday, this kind of falls into that category too. BTDR actually holding up pretty well. I had an order in the $1 million challenge. I'm now looking back, I must not have hit the enter button, but I had it in my own account. Trinity Trade, we got out, booked gains for 27%. So I still have a working order to reduce on BitTDR, to book those gains, the $1 million challenge. So we'll see if that comes about tomorrow or soon. Let me see here. Joe saying, a couple years ago, starting mid of 2021 to end of 2023, had money under management. At the end of 2.5 years, it was down 5% while being charged over 1% in fees yearly. Yeah, that's not cool, right? Not cool. Lewis, what is the Trinity Trade? Well, I'll drop a link here. You can come check it out. But that's where we teach what we do. That's where the magic happens, over in the Trinity Trade. Deep Currents is what Blake shares with his team. But yeah, drop the link there in chat, Lewis. So let me see. Get back to my screener here. Okay. APLD, how's that one doing lately? Still hanging out near the highs. Quantum is taking it on the chin today at the individual stock level. ARQQ down over 22%. Qubit selling off pretty hard here. QBTS, actually, in the big picture, not really that bad. But I know there's a lot of, I'm sure the short sellers are very happy today to get some of their money back. So we'll see if we finish the week off that. I mean, again, we've seen these names get cut in half before. I mean, even if Rigetti were to drop 50%, which is entirely possible, that'd take you back to like, $29, $30. Could be a higher low, which is crazy. Navitas Semiconductors. So semiconductor screening well. Look at that big breakout there. That looks solid. No trade on that at the moment. TerraWolf, nice trend higher on that, but not really a good base to buy. The move's already been made. But you can see here how there's still so many stocks near the highs. Newegg, yeah, that one pumped and dumped. BKKT, Bach T Holdings. Nice break here, actually. So you have that 30, 24. Probably going to see this go to like 57 or so, but not something I'm buying today. ASTS, how's the space doing? You had a new high there today, reversal. RKLB, hanging out near the highs there. SNDK, yeah, one's still up today. SanDisk, looking pretty solid. Wow, incredible move. This is one that, actually passed my setup test. This would have actually been the buy point. Wow, wish I would have had that one. What else do we have here? We have Viasat. Viasat, that is a day off of its all-time high. Okay. So we'll see where that one settles out. I'm going to go towards the bottom of my list. Did I have? Oh, I was thinking of a different one. SATS, Echo Star. Yeah. This one's flagging. It's going to take some time. Clean Spark. We've been looking at this one. I didn't put out a trade idea, but I am watching this one. It's down 10%. I've never really had the best success trading this stock, admittedly, but the setup looks incredible. Let me see here. CLSK. Did we take a swing on this? Well, maybe tomorrow. We'll come back to that one. I still haven't figured out Core Scientific. I thought they got bought out by CoreWeave, but they're still trading, still hitting new highs. CoreWeave actually looking pretty good today. Up while the market is down. That's some pretty notable relative strength. Pony.ai. Now, this is a Chinese AI company that I have been watching very, very closely. Beautiful setup there. Not quite ready for a trade. Micron, here's some more chips. Micron keeps climbing. Who here still has Micron? Make sure you tune back into this session tomorrow when I'm live because we're going to be tightening up our stops and our positions that are still open. Okay? So Micron leading the breakout higher, guys. I hate to break it to you, but this is not bearish price action. Okay. So some of you still have it. Some of you sold it all. That's okay if you sold it all. So Jeff looking at ARGX. Yeah, nice breakout there. Yeah. The real nice entry would have been actually like right around here and then right there. If you missed that one, you had another opportunity there on the retest. But yeah, this can't really chase that now. Massimo looking at AMAT. Yeah, Applied Materials. Yeah, that looks good too. Oops, I wanted the weekly. Yeah, you're going to have some resistance here around 240, but you clear that, it's off to the races. So again, chips, semiconductors today are saying just take it easy. We'll see where we close the day. Okay. BNR News. You know, I did get the alert on Prax. What happened today? Praxis Precision Medicines. They must have had some sort of trial that came through. Yeah, I did get an alert on that. I think I had to restart my computer, of course, so I lost my alerts. But yeah, that's pretty remarkable. I did see that alert, but I didn't get a chance to check on it. What else is here in tech? WDC, Western Digital, very clean uptrend. So again, I'm seeing enough strength in tech that kind of keeps me composed in this environment. Ouster reversing again. You know, Ouster might be giving us another chance to get long. So what I'm going to do here, because Ouster is building this beautiful, beautiful, beautiful pattern. Let's see, 18, 36, basically a $54 stock. So I'm going to set an alert on this. So let's go ahead and 36.83. Might even have a trade for you on this today because what I said its target was 54. It's not going to trigger today, but I do want you to be prepared. So 36. $33.12. That would be the stopper below it now. So this one's not ready. So I'll save this one, but this is a trade that I'm going to have probably coming your way here soon. With that all being said, I need to wrap up my session here because Tony's about to be jumping on, taking you through another session. So I appreciate you guys tuning in and joining me. I hope that you enjoyed this session. I'm going to be live with the Trinity Trade again here in about 30 minutes. I'm going to have a cup of coffee with my wife. It's a beautiful day here in Michigan. I actually planted some garlic earlier today, the last planting of the year. Harvested the last of my carrots yesterday, and harvested some kale, some broccoli. But no, at this point, it's just a matter of cleaning up and getting everything ready for the winter season. So I'm going to be live again in about 30 minutes here with the Trinity Trade. Thank you all for tuning in. Stick around for Tony's session. Take care, everyone. Talk to you soon.